Well, Hurricane Milton comes less than 2 weeks after Hurricane Helene made landfall in Florida. The storm could cause damage of up to $175 billion, or in a worst-case scenario, according to Wall Street analysts. And there are questions about whether major weather events and rising insurance costs are going to have an impact on the coast. And joining me here on set to discuss, Eddie Shapiro, CEO of luxury real estate broker Nest Seekers International. Eddie, of course, our primary concern is for people's safety, human life out there. Let's talk about some buildings as well. Real estate sales in Florida had already started evening out or even trending down. Is there impact here?
In the short term, on the West Coast, absolutely. Concerned, focus on recovery, rebuilding, and insurance costs, of course, it's all a factor. But overall, Florida is a very strong, powerful state that has great momentum the past few years. We've seen incredible booming economies and Formula One and hospitalities and financial institution moving down there. So I think the rebuilding and the recovery will be quick, and bullish as always on Florida. We have offices in Miami, in Palm Beach, and we have big teams spread out throughout the Florida state, and they're all confident and ready to get back to work as soon as this is over.
I imagine interest rates heading lower doesn't hurt. How close are we to a point where that provides a catalyst for the market?
It already is. We've now experienced probably our greatest August and September months in a very long time. Just before I came over, I've spoken to one of my brokers, that reported that a new listing they put on the market, a $15 million townhouse on the Upper West Side, had 66 showings in 40 days. Our friends in the mortgage markets are reporting over 200% increase in mortgage applications for new homes. So I think the momentum is positive. Even though we just had one rate cut, and those cuts are not necessarily correlated directly to mortgage rates, but rates are now in a 6% range, give or take. And in fact, with some buy down certain programs, you can get into the market at 5 and change. And so we're seeing the impact already across the market. Momentum, showings, everything.
At the very highest end, which is where it sounds like that condo might be, which has a bigger impact, though, mortgage rates or the S&P hitting record highs?
Well, I think it's both, right? So if the S&P and Dow are at all-time highs, then people's portfolios are better than they've ever been. If in blue chip stocks, you're making money one way or another, and you're going to invest it in real estate eventually. So if rates not necessarily affecting dollar for dollar the purchase, but what it does do is it brings confidence to the marketplace. It brings momentum. It brings a movement, and that we're not going to move into falling values. And so if that's in place, so whether you're going to mortgage the property or not, you're getting into the market.
How different is the luxury buyer's sense of enthusiasm, optimism versus the general market now in this economy that's seen some pretty significant separations in how different people are faring?
There is, but the luxury market always sorts of leads the way. Right? So this year we've already seen multiple trades above 100 million for purchases of single homes. There's a lot of pipeline transactions and luxury. In fact, the past 60 days has seen higher levels in New York. I think 97 home traded over 4 million, which is as high as it was pre-pandemic. And so when that starts to move, everyone else kind of jumps in the marketplace. They believe there's wealthy people know what they're doing, then we should all follow.
How much does a transfer of wealth to Gen X and millennials affect the market right now? How many of those buyers in the category that you serve are the ones who are starting to inherit that level of wealth?
It's a mixed bag, right? People are buying at different points in their life. The home ownership, the American dream is always there. there was for the past year, maybe it was harder for first-time home buyers and people that are really mortgage dependent to make a move. They sat on the sidelines, and more of them are moving right back into the marketplace, and they're sorting out their down payments and purchasing at all levels. Millennials, Gen Z, every generation.
Still seeing crypto buyers?
Crypto buyers, absolutely. They're still there, 100%. Even though they left, some money on the marketplace a few months ago, they're still active. They're still massive portfolio, and they still want eventually to diversify to the safest investment there is, which is real estate.